In today's video, we're going to take a look at how to use covered calls to generate passive income in the stock market for 2020. Welcome back to the channel, guys. My name is Bruce Wang, the dividend investor and real estate investor. And today we'll be taking another look at covered calls. So I made a pretty in-depth video about covered calls a few weeks ago, and this is going to be an update to that video. And on top of that, I've learned a few extra things and I've used a few new tips that I want to share with you guys on how I generate more income now with covered calls. So if you haven't seen that last covered call videos, I really recommend you guys to check it out to just learn the basics all over again, and on top of that, get used to some of the vocabulary that I'll be using. Also, I'm going to be doing all of my covered call options with my Robinhood portfolio. So let's jump right into it. So my portfolio for today is worth $76,832, and I'm generating around $2,660 worth of dividends. Everything that I'll be mentioning in today's video will be linked down below in the description. If you guys want some free stocks, if you guys want some to see my entire portfolio, everything's all down there. The main strategy that I've been using for the last 2 years is just dividend investing. I've been investing in a lot of stocks that pay dividends, and I collect those dividends every single month, every single quarter, and I reinvest that into the stocks that I already own. Today, we'll be talking mostly about covered calls though. Covered calls, I would say, is the second greatest way to invest in the stock market, in my opinion. The first way would be to just invest in dividend stocks and reinvest. But when it comes to covered calls, it is a little bit riskier, but if you use it the right way, I think that you can generate a lot of extra income every single week or every single month with little downside. So if we take a look at the screen here, these are all the call options that I've made in the last 30 days. We can see AT&T's on here, AG&C, Realty Income, ExxonMobil, and my newest addition to the portfolio is my Gap stock. Currently, I've executed like 2 or 3 covered call options with Gap, and this is going to be probably my newest way to generate a decent amount of income for the next few months or a few years. Because I own so much of Gap right now that it's a lot easier for me to play around with covered call options. So first off, if you're just beginning to invest in the stock market, doing options and doing covered calls is probably not the first thing that you should be doing. Just learning the basics, learning about growth stocks, learning about dividend stocks, and just investing for the long term is probably going to be the better way and less risky way of just starting out. But you know, after you've done it for a few years like me, I know a lot of you guys have been following me for a while now and have started to build your portfolios up to a decent amount. Let's take a look at my portfolio really quickly. In my portfolio, you can see that I have 100 shares of a decent amount of stocks now. You're going to need at least 100 shares of a stock to do a covered call. So that's one mistake that a lot of people might not know when they first start out. So Realty Income, you can see to have 100 shares of Realty Income, that's a $6,000 investment. To have 100 shares of ExxonMobil, that's over a $4,000 investment. So if you're just beginning and you only own a few shares of certain companies, try to build up your portfolio enough until you can do covered calls. On top of that, you know, it's really difficult, but it's possible to get to 100 shares. Like I started with just one, all right? Just like everybody else, I just started with one share. And over time, I was able to accumulate hundreds of shares. So let's jump into Realty Income so I can show you some mistakes that I've made and some tips to avoid making the same mistakes that I've made. My position with Realty Income right now, I own 100 shares. Average cost is $56.14. Total return so far is $400, so everything is on the up and up with Realty Income. So if you want to find all the options on Robinhood, you have to click the trade button, jump into the trade options, and you're going to be met with this screen. Just slide your screen to the right, swipe to the right, similar to Tinder, I think. And we're going to be only doing sell calls, all right? We're selling covered calls. So we're selling options with stocks that we have at least 100 shares of. That's the meaning of selling a covered call. When it comes to the buying side, buying a call or buying a put, that is completely out of my realm of expertise. I have no experience in that, and I know some people are able to make a large sum of money from it, but people can also lose a large sum of money, and I'm all about making money, so that's why I'm sticking to covered calls right now. So when it comes to covered calls, this is a really old strategy. It's not something that I made up myself. It's actually one part of a bigger strategy called the wheel strategy, where you mix in selling covered calls with selling covered puts, or selling cash covered puts. So I'm going to make a series out of this so I can share you guys my results from this. But so far, I have been having pretty good results. Let's jump into the covered calls. So the first mistake that I made was I thought that Realty Income was an actually good stock to do covered calls with. And it's either because I'm not experienced enough in doing it, but I think that doing 1 month covered call options is not a good idea. 1 month is a long time right now, all right? And with the way things are in the stock market right now, stocks and the prices just keep climbing for no reason, dropping for no reason. No news is coming out from these stocks, and the price fluctuation is just so great that I'm just more comfortable now with doing week by week trades. So that's where I'm moving my strategy to now, just doing week by week option trades. For me, I think that the price cannot fluctuate as much in 1 week that it can in 1 month. So let me know if you guys had this type of experience as well, because I just can't handle the volatility of 1 month's worth of trades going on in the stock market, because the last time that happened with Realty Income, I got way too emotional. All right. So that's the second mistake that I've made when it comes to doing covered call options. I'm married to Realty Income. I didn't know that before until I was in the covered call trades. So if you are trying to do covered calls, don't do covered calls with a stock that you just want to own. All right. So when I was in my covered call options trade with Realty Income, every day I was checking on it, and just one day it jumped up like 5 to 10%. And I was just wondering, dude, what is going on right now? Am I going to lose all of these? Am I going to lose Realty Income in the next few weeks? So at that time, my heart just sank. I knew I can't get rid of this stock. This is a stock that I want to own forever. And if I were to do it, I would need another 100 shares. With another 100 shares, I think it would be a lot easier for me to just let go of it. If the price is right, if the options is in the money. So going back to some of the basics, the main advantage of doing covered call options is that you can generate a lot of income from just owning a stock, all right? And when it comes to my strategy, I'm trying to make as much premiums as I can. So if I wanted to do a covered call options with this option right here, I can sell Realty Income at $62.50. That is also known as the strike price. On July 17th, that is known as the expiration date. So if Realty Income does not go over $62.50 on that day or over that day, then that means I'm able to keep the premium. And when it comes to this one contract, the minimum credit here, this is the premium. So I'll be getting $65 credited to my account for, just going through with this trade. So when it comes to this option contract, I make money when the stock price goes up. When the stock price stays the same, I'll still make that $65 premium, or when it goes down slightly. So even if the price of Realty Income for me goes down further from my average cost, I'll still be able to make that $65 premium. Luckily for me, I've held Realty Income for over a year now, and I'm able to have a lower average cost than the strike price right now. Way lower. It's like I showed you earlier, it was like $56. So that's why doing covered calls is such a powerful option trading technique or strategy. So if I was forced to do this, I would only do this contract maybe 1 week out. So I'm gonna look at this next week on Monday, and if the option premium is still pretty high, I might consider doing it, but most likely not. Like I said earlier, I'm really married to Realty Income, and I'm not really willing to let it go. I might let it go at maybe $70, $75. So let's take a look at this $75 call. So the higher that you move the strike price out of the money, let's do one one contract. So even with this $75 strike price, I can't even get one contract in. Let's move it down to maybe 60, 67 and 50 cents. Yeah. So like I said earlier, Realty Income is not really one of the best covered call option trading stocks to use just because there's not a lot of option volume. I'm going to show you some other stocks that have a lot of volume and a lot of different prices. Just Realty Income is on the lower end when it comes to the premiums and just the overall contracts that you can buy. There's just not a lot of options here. So ExxonMobil is a good example of a stock that you can do options trading with, especially covered calls. So let's jump into the options here. If we take a look all the way at the top, you can see all of these dates. Every single week you can do an options trade with ExxonMobil. So that's what I've been trying to do. Last week I wasn't able to find a good premium contract, so I didn't do one last week, but I was able to execute that with the Gap stock, which I'll talk about later. So before we jump into more of the options with ExxonMobil, I'll let you guys know my position. I owned 100 shares. My average cost is at $49.58. And when it comes to the stock price of Realty Income right now is at $44.36. This isn't good for me, all right? If you're not in the money when it comes to your stocks, it's going to be a lot more difficult to do covered calls just because you would have to go for such a high strike price to make your trades profitable when it comes to covered calls. So let me show you an example. So ExxonMobil, the share price, like I was saying earlier, is $44.36. That's why you can see it right down the middle. Anything under here, you're not gonna do cover calls on any of these options down here, just because you're not gonna sell these contracts at a lower price. You're just going to be losing out on money if you do that. So like I was saying earlier, my average cost was around $49. So I would have to take my strike price way out of the money to even find a profitable contract. So obviously I'm not going to sell my contracts at a lower price than my average cost. I had to look up all the way until I found a $50 contract call here. And the premium is only $3. So what are the chances that ExxonMobil right now is going to go from $44 all the way to $50? If the price jumped, 10-20%, all right, I'm going to sell and I'm going to take profits, and I will gladly do this covered call. So that's one of my other tips. Make sure you pick a strike price that you're really comfortable with, and for me, I try to find the most premium strike price that I can out, like that would bring me the most profits and a decent premium. That is like but that is the most difficult part of doing covered calls, because the closer you are to the money. So if I did this $44.50 covered call option here, I would generate $76 in premiums. What are the chances that ExxonMobil be at $44.50 or over on the end of the week? I would say the chances are pretty high. So I'm not going to be going over any of these. So I'm not going to be taking any of these covered call options here at this price level. So one other mistake that I made doing a covered call options trading is that I did not pay attention to the ex-dividend date. So basically the mistake here is, if you're going to be selling your dividend stocks, if you're going to be doing covered calls options with them, you have to be aware of the ex-dividend date. If the ex-dividend date and the expiration date is around the same time, and those contracts are profitable, they could be called really early and you would just lose all your stocks at that time. So as a dividend investor, you guys also know that if you bought a stock before the ex-dividend date, you'll be qualified to get that dividend. And that goes the same with selling covered call options. Those guys that are buying your covered calls, they have the power to collect your dividends if they had that option before the ex-dividend date. So let's take a look at ExxonMobil here. I'm going to be scrolling down to the payment schedule. So ExxonMobil has a ex-dividend date of May 12th, which passed us a long time ago. So when it comes to ExxonMobil for the next few months, I do not have to worry about any of my contracts being called away early, just because if they want to collect that dividend, they can, right? So when it comes to ExxonMobil, Let me give you an example here. So with my example of ExxonMobil, if I didn't pay attention to the ex-dividend date and I was just doing covered call options with them, I might have lost $87 in dividends in June. Let's say, for example, if I sold that contract before the ex-dividend date. So make sure you double check your ex-dividend dates if you're doing covered call options with dividend stocks. I'm going to show you some results and show you some of the premiums that I've been collecting. So far for the last few weeks now, I've been collecting around roughly $100 every single week in premiums. And let's take a look at the Gap stock here. I'm not going to tell you exactly how many shares of Gap that I own, but I do own a lot. And if you guys want to know, you guys have to join the memberships. So when it comes to covered calls with the Gap stock, right now I have one covered call at $13. And you can see like I'm getting around a $31 premium from that. There you go. And I have one contract at $14 strike price, and that is a $7 premium. And if we take a look at the bottom, I'm going to switch this to puts, selling puts. I have a $35 premium for doing a sell put of Gap at $12. End of the week is the expiration date. So these are some of the things that I'm doing to generate a little bit extra income. If you guys want to know more analysis from my Gap, why I'm buying Gap and why I have so much shares, you have to go watch some of my older videos. So in the next installment of this series, I'll be going over covered puts, very similar to the way that I did the original covered calls video. And that will complete the wheel strategy, just so you guys will understand what the whole view of it looks like. If you guys want to watch more videos from me, don't forget to check out these videos here. Like, subscribe, hit that notification. Webull, sign up for the free stocks. Robinhood, sign up for the free stocks. Check out my portfolio on M1 Finance. Follow me on Discord. Sign up for my membership if you guys want to become a member of the Wang Gang. Instagram, and my second channel, and I'll see you guys in the next video. Bye.